Welcome to this video. In this one, I'm just going to do a short educational one or informational one, if you like. And it's just to help people understand the amount markets fall when they're in trends to the up or downside. And really what it's based on is just previous price levels. I often say in my videos about when price comes down and then comes back up again, you do get the step, sort of the stairs sort of arrangement, and that's just because levels have to be broken down over and over. And if the sentiment isn't strong at the time to push the market far enough, then you will stop early. So that's going to really dictate where your exits are going to be. And this really is why when I called this short, okay, I spoke about early exits, right? And they came on the pound dollar at this point. Now, this isn't going to be a really long video, but it's going to be a very helpful one. So you can see clearly how the price gets stumped at this point already. Okay, now it may come down further because the price has rallied so much from this low here, and you're likely to touch on the next level of early support. And it's likely, unless you get a massive break in the news, that will tear lower at any time. So the point is, guys, you have to determine your target. And I always say it's best to trade in stages in the market, in which case your exit would be right at this point here. Okay, so you would look to kill this short off as soon as you hit that early support, because that's where buyers are going to start to move into the market on a daily basis. So if you put your weekly up, of course that changes. Okay, and you can see a lot more levels. So when you're setting your targets, they're going to have to be where the opposite side of the market starts to move in. If you're, shorting, it's going to be where buyers start to move in. If you're buying, it's going to be where sellers start to move in. And it's always based, at least for myself, on the earliest price, because at that stage you're going to find, if you're not closing out a trade where people are getting in on the other side, you're running a little bit of a risk, and you may find you get a tiny bit stuck. So make sure you plan your targets carefully. Really, you want to plan them at price action levels where you can look to exit the market. As the market falls, you can see this one actually came in slightly more. Okay, so this would be your zone to kill off the trade. Then you could look lower for more zones as price comes down. So that's all for this one, guys. It's mainly based on where you enter and exit the market at the earliest price action levels that you can see most of the time. If you're more risk averse, you might hold off. So thanks for watching, and I hope that really helps. And of course, I'll see you, as always, in the next video. See you later, guys.